How's it going, guys? I wanted to go ahead and hop in before we start the video and say that it's going to be a little bit different. I wanted to start by hopping on the chart first this time and then, kind of going over the notes after. I know it's a little bit boring, coming on a video and, seeing notes and nobody really wants to, read notes, but that's the best way I learn and that's the way I like to do it. But, for some people on YouTube or, just for a lot of other people, that might not be the best way. So, right, that's what we're going to be doing today, right? We're going to have notes and chart, but chart coming first. And yeah, let's go ahead and hop into it. Hopping on the chart, covering our topic with high probability order blocks, right, we're going to be looking at this segment of price action that happened over the week on NQ and ES. Right, we see lower time frame here. Right, we have a SMT with this low, and showing it on ES, right, with this low breaking this low. Coming back to NQ, right, we also see higher time frame. Right, we have the weekly SMT below the candle body, and I'm pretty sure on NQ, right, we went ahead and took it. Either way, right, we have that SMT in place, higher time frame and lower time frame. We start to reverse and deliver back into our inwalk, right, for one tap, two tap, and even three tap after fully filling the inwalk itself. Coming into a Thursday, or excuse me, a Wednesday, high of week, right, I honestly did, expect Thursday to go ahead and continue, especially with the Asia Smart Money reversal. I don't really like to hold much value to those, unless London shows me that it's already done the damage. Right, this low, not needing, right, with this being a kilo, I wanted displacement through it to break this SMT and continue delivering us lower. So I wasn't fully sure of, our reversal here to begin with this, right, sweep higher and then delivery lower. With a higher time frame, right, it warrants, to keep go ahead and displacing lower, right? We've balanced, the price range up here. So if we are bearish, we should keep delivering lower. Coming in after delivery into the inwalk, the 1 and 2 tap, even on Tuesday, right, with this low resistance into this FEG here, it made sense. I can't remember exactly, right, what trade I'm not sure if we ended up ever actually taking a trade Wednesday. But either way, right, after this soup and delivery, we were expecting lower, right, but after this price delivery here into our higher time frame order block and reacting, okay, we see 15, one we do see on the hourly, right, our rejection block is formed, and we react very, right, reactively from the wick and close above the body, creating our order block here. And also on the 4-hour, right, we see thick displacing down candles, right, with our 4-hour candle sweeping and closing back within the range. We also come into, from our high to low that we've created, OTE of our range, start to react, deliver higher, right, and like we always talk about, we don't listen to the noise in the middle. So coming in from our London session, we see, right, that London reverses right at 3 a.m. and has low resistance above, right, for no real reason to go ahead and deliver lower. We've reacted to the order block, right, same, right, rejection block on the hourly, delivery higher. We come back in one more time, accumulate, and come into our 6 candle, where we see on the 4-hour, we open low into a discount, and as well as the hourly, into our 8 a.m. news candle, we open low into a discount, and that's where we actually went ahead and took long for our 8:30 delivery. Knowing that London had already done the damage, right, this turtle soup should hold. And we see on the left side, right, we barely, right, peek past that low, right, wick and close higher, right, reacting to this order block here and failing to close below. Deliver more equal highs into low resistance above, low resistance, right, with the high resistance low put in below. I know, right, we talk about our time-based liquidity sessions, right, but with this low resistance here into the PM session, right, we, have time-based liquidity in both directions. The thing is, right, this this liquidity does not need to be run to go higher, right? Asia and London both did the damage, right? We see, right, our breaker created, come back into the range, right? Like we always see, lower time frame, and it doesn't matter that it's, an Asia into a London session. You'll see this on a classic New York buy, right? And it just delivers us higher, almost like a CPI candle. We accumulate, soup lower into the breaker, right, and deliver higher. We did take long, right, took profit. I think it was like, into this wick here. And I was okay with that. And then I ended up trying one short here, right, delivering right into the breaker with our, Asia, at the time I called it like the Asia high breaker, but Thursday into, yeah, it was right here. We would have took short and then we got hit break even. And just one thing I need to, either change about my rules or fix in myself, is not shorting, on a day that I know is probably going to keep running bullishly, and just waiting for that retracement, because when I'm stuck in short, I don't usually like to flip my position, just because, right when I first started, I didn't, have very much luck with flipping. I know I probably could now, but, I want to I want to keep some sense of rules while I'm, trading. And, same thing here, right? We've swept with a, down, thick displacing down candle into our PD array below with our breaker formed, right? Coming into a discount. We then close above, right there, and form, right, a high probability order block. We come in to EQ, react higher, form another high probability order block, delivering, right, from a high probability order block. We come in, right, we create equal lows, fail to close below, and deliver higher. You start to accumulate. There's no need to manipulate these lows, right, because these lows have done the damage into these lows doing the damage, right, higher time frame. Right, we're not just looking zoomed in on a 15-minute chart, right? We have all of our higher time frame, analysis in mind, as well as, right, our lower time frame market maker models in mind, right, with our reaccumulation, right, first leg accumulation, and whether if you want to look at this as one higher time frame, right, accumulation into a reaccumulation, right, into your final leg, delivering higher, right, as long as you're seeing the market maker model, right, higher time frame, that's all that really matters. Right, and it's delivering from our higher time frame SMT and a 4-hour PD array, right, with that being our order block here. And technically, right, our rejection block inside of the order block, but right, 4 hours not as pretty, but we do see, on the 2-hour, right, our 3-candle model close back within the range on, in the Asia session, right, then delivering, right, from that FEG into the candle wick body, delivering higher. And we also see, right, that bottom, that low being high, high resistance and protected. So after, not, being super sure of the reversal here, and it doesn't matter what you see people on Twitter, it only matters about yourself. And, like if you're actually getting better and understanding why these things happen, why they did, especially right after, breaking this high, reaccumulating, and not needing, to come back into, this lower time frame fair value gap there, right, we see on the 5-minute, right, left open, right, breaker created. There's no need to come back into right, a full deep discount. Right, under EQ was enough, and we don't even touch OT, right, and align it with that high. And then we also see, right, our 5-minute open low into the high close, and as well as on a 15-minute, right, our open low into a high close. Right, and also, right, looking on our 1 hour, with our 3 key points, we have thick down closing candles, sweeping lows after our reaction into our PDA, and right into a discounted price area. We see, right, bullish FEGs left after our up close candle, reacting from our wick into our open low, high close, into a right 4-hour open low, high close, and closure back within the range. That's why I say you can use those higher time frame candles, right, as a rejection order block. Aligning, right, your time frames and making it make sense, not forcing it to make sense, but making it make sense. Bringing some notes in here, right, with false breakouts and CSIDs, we're going to be looking for stop raid where the markets move past old highs or lows, but instead of continuing, it goes ahead and reverses. This dives straight into our key highs and lows. And also, we're going to be looking for displacement into our key areas and leaving behind FEGs. Right, these gaps show that the market moved quickly, obviously, and they leave inefficiencies that can be later filled and used, to help predict our market move. A lot of the times, the noise in the middle is not useful, but getting into our turtle soup, it is useful knowing, right, and understanding, right, where our manipulation is, getting into it, and once you know where the manipulation is, we're going to distribute through it. So it's, like I said, noise in the middle. For me, right after stops are rated, all the orders fill to 10. Tend to fill right at a key time, at a key area, creating an order block. This is where smart money likes to enter, and this is right where the best, most safe entry point is for any beginner, even moderate levels, and even into advanced levels, coming down to lower time frame order blocks. Entering within the order block gives you a high risk to reward, right, while providing cushion into the high time frame key level. Right, if it's not super precise, if there's a high time frame SMT or something like that, right, you can manage the small retracements and potentially let your trade run to the new higher highs or lower lows. Using right the body or the wick of the FEG, if the FEG's right filled, if there's no FEG from the order block, right, on a higher time frame, but there is a lower time frame, usually that FEG will be filled, right, and come in and touch the body of the order block. Right, if there's an FEG open right on the higher time frame and lower time frame, it usually will leave those lower time frame or fair value gaps open into right, maybe leaving a higher time frame fair value gap open, depending if it's a breaker or right an order block. Right, you have to be you have to pay attention whether what time frame you're on, as well as what PD array you're using. Right, breakers and order blocks can tend to be used the same. I see some people doing that, but right, as long as you're just understanding right what is formed and where, right, not everyone's a breaker or order block, right. We do have mitigation blocks, blah 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 blah, but I try and bleed out some of the noise by never even mentioning those, and only mentioning what you need. We always want to consider our session timings of our order blocks formations coming into right high volatility sessions into London, into New York. They tend to be more reliable. You'll see right on the chart I used the London order block, and I wasn't too comfortable in the Asian order block, and there's no problem with that. The higher time frame turtle soup did make sense, but with the weekly profile I would have liked to see lower. So I can't just fade my higher time frame profile with something that looks good on the 4 hour, but that higher time frame SMT right did hold, and we came into OTE, right, failed to react the way I wanted to see, and made me a little bit weary of my bias and what I wanted to see versus what should happen. Also, right, when taking profits, you should consider right taking profits at logical levels as swing higher or lows and or midpoint of the range can help you lock in profits while still allowing a portion of your position to run. Bringing some notes in here, right, with false breakouts and CSIDs, we're going to be looking for stop raid where the markets move past old highs or lows, but instead of continuing, it goes ahead and reverses. This dives straight into our key highs and lows, and also we're going to be looking for displacement into our key areas and leaving behind FEGs. Right, these gaps show that the market moved quickly, obviously, and they leave inefficiencies that can be later filled and used, to help predict our market move. A lot of the times, the noise in the middle is not useful, but getting into our turtle soup, it is useful knowing, right, and understanding, right, where our manipulation is, getting into it, and once you know where the manipulation is, we're going to distribute through it. So it's, like I said, noise in the middle. For me, right after stops are rated, all the orders fill to 10. Tend to fill right at a key time, at a key area, creating an order block. This is where smart money likes to enter, and this is right where the best, most safe entry point is for right any beginner, even moderate levels, and even into advanced levels, coming down to lower time frame order blocks. Entering within the order block gives you a high risk to reward, right, while providing cushion into the high time frame key level. Right, if it's not super precise, if there's a high time frame SMT or something like that, right, you can manage the small retracements and potentially let your trade run to the new higher highs or lower lows. Using right the body or the wick of the FEG, if the FEG's right filled, if there's no FEG from the order block, right, on a higher time frame, but there is a lower time frame, usually that FEG will be filled, right, and come in and touch the body of the order block. Right, if there's an FEG open right on the higher time frame and lower time frame, it usually will leave those lower time frame or fair value gaps open into right, maybe leaving a higher time frame fair value gap open, depending if it's a breaker or right an order block. Right, you have to be you have to pay attention whether what time frame you're on, as well as what PD array you're using. Right, breakers and order blocks can tend to be used the same. I see some people doing that, but right, as long as you're just understanding right what is formed and where, right, not everyone's a breaker or order block, right. We do have mitigation blocks, blah 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 blah, but I try and bleed out some of the noise by never even mentioning those, and only mentioning what you need. We always want to consider our session timings of our order blocks formations coming into right high volatility sessions into London, into New York. They tend to be more reliable. You'll see right on the chart I used the London order block, and I wasn't too comfortable in the Asian order block, and there's no problem with that. The higher time frame turtle soup did make sense, but with the weekly profile I would have liked to see lower. So I can't just fade my higher time frame profile with something that looks good on the 4-hour, but that higher time frame SMT right did hold, and we came into OTE, right, failed to react the way I wanted to see, and made me a little bit wary of my bias and what I wanted to see versus what should happen. Also, right, when taking profits, you should consider right taking profits at logical levels as swing higher lows and or midpoint of the range can help you lock in profits while still allowing a portion of your position to run. That is okay. That's not the what the fuck. Hold on. Just gonna, bro. Not sure why that came out like that, but right. Order pairing high time frame into low time frame. Right. Low time frame order pairing is right. It doesn't make sense per se, but understanding right order flow and your institutional order flow on that low time frame, running and delivering from that high time frame will be key into those low time frame entries for an even bigger RR. Obviously, like I say, I like to align all my time frames and overlay as many high time frame narratives on my key areas, right, as highlighted zones, right, where we should be expecting high activity within the order block. This can provide additional confirmation for your entries based on our reaction, as well as market sentiment and news. Beware of your broader market sentiment profile, and in any upcoming news events that obviously could influence price. False breakouts often occur during news releases and when market sentiments shift. Coming into lower time frame confirmations right before entering at the order block, right, consider waiting for a confirmation on a lower time frame, 15-minute, 5-minute, and 1-minute, right? Obviously, with your higher time frame confirmations, right? A clear reversal signature, such as an accumulation, manipulation, distribution, low time frame into your final smart money leg reversal, into a reaccumulation above the old high. Even turtle souping that internal low, is still very, very wonderful. Into the order block. And whether if it's into the order block or the breaker block, right, lower time frame, it'll most likely be an order block, right, like on the 5-minute. Just wait for those clear signatures, low time frame into your high time frame narrative, and you won't see FOMO as much because you'll just be able to enter and have your stop you know, below an invalidation or above an invalidation point, and not really be so you know, concerned, because you know, right, the higher time frame draw, and you'll be able to hold through the whole expansion. Considering, right, our liquidity considerations, right, you obviously want to monitor liquidity above or below key levels, you know, to assess the likelihood of stop runs. The more liquidity resting above or below, right, the higher chance of a false breakout, and or, right, just the higher chance of it being a key high or low. Always, right, be prepared to adjust your plan if the market doesn't, you know, behave as expected. If, you know, the CSID doesn't occur or the OB doesn't hold, right, it's essential to understand why, right, where you went wrong. You know, make sure you have your stops in place, and, you know, reassess. Don't, you know, just, right, hop back into a trade, or, you know, just quickly, you know, try and rush and get panicked, right? Even if you don't, you know, take another trade that day, you know, there's always a trade the next day coming into, you know, the next week. We're always going to get beautiful, right, setups. You know, review every trade, right? Every trade you take, review the time, review, right, why you took it, right, the execution, the outcome, and look for patterns in what worked, why it didn't, and refine your approach accordingly. We're going to get back onto the chart for a few more examples, and dig a little bit deeper into, right, the highest probability order blocks. Coming on to Bitcoin on the 4-hour, right? We'll, you know, zoom out to this weekly time frame, right? See our accumulation, manipulation into the expected distribution, right? Where, right, same thing happens, add in to this position, and, right, just hit break even. You know, at that point, right, it's, you know, small, like, it's really not even like that big of a realized loss, so I'm not really worried about it. You know, into, you know, this point down here, re-entering, right, with the same type of plan, right, just running the internal liquidity one more time, right, with this being an inducement of the low, and, you know, turtle souping and SMT in the low as well. Right, we see on the 4-hour, right, after our soup, right, we see our 4-hour CSID in the close above, right, as well as our reaction within the candle into creating low resistance highs. We don't break the high, but in most cases, if, right, my you know, bias higher time frame is right, we don't need to break this, break these highs, right? This inducement of liquidity, you know, on the 4-hour is just enough, right? We see, right, we also come into OTE of our high, of our lower low and higher high, and fail to close below, right? We see with our reaction from our CSID, we close back with a very reactive wick, displace away, technically inverse the fair value gap, and don't close, but either way, right, deliver higher, and, right, deliver another failure swing with induced, right, liquidity, come back with another failure swing, right, anticipated lower time frame into our rejection block here, delivering us higher past our high here, taking our first partial, understanding that we can come back into the range, but, right, we shouldn't see past one this low, and, you know, even lower time frame into our breaker, right? I wanted to see, right, some FEGs left open, and, you know, keep displacing away. Right, at this point, I wasn't, you know, super worried, because I knew, right, this high, you know, isn't super high resistance. We've just mitigated the order block, right, with our double tap, and, you know, delivered right back into OTE of our range. Excuse me, wrong way. With the new lower low and higher high we've created, right, and failed to close. Even here, right, with the strong close coming into, right, Thursday, even though it's an Asia session, right, the damage has been done with these lows here in the high probability order blocks, and there's, right, after breaking this high, there's no reason to deliver, right, back lower past these lows. They are all now protected, right, same as like this one, right, protected once we introduce, you know, reverse CSID and induce more liquidity above, right, fail to close, react to the wick, same thing, right, high probability, protected low, induce more liquidity, right, anticipated failure swing, right, and here we don't always have to get this third anticipated failure swing, but it is possible, and, you know, allowing your position and your stop to account for that is always, right, best case scenario. Coming in to a 1-hour time frame, excuse me, right, we see the same thing, our accumulation, manipulation, distribution, our Superman S. We shouldn't deliver past this low. That's delivering from this low. That's delivering from the turtle soup. We've now formed our sequence, so high probability, right, high resistance, high probability, high resistance. Coming into this, right, reacting to our order block, higher time frame and lower time frame, right, CSID, order block, and wick, right, we do react to it here, right, and then like we said, form our 4-hour rejection block, order block, close above, and then just, anticipated failure swing one more time, right, not breaking any lows. Zooming in on bar replay, so that's why it doesn't show the executions, right, we see our 15-minute sweep, right, the lower time frame looks exactly like the high time frame, and we are fading, right, bearish order flow, right, with high time frame bullish order flow. We see, right, after this breaker OB's formed, right, we shouldn't run, right, past this low, right, into this low, and we see our, right, wick above the high that should be filled to and through. Our wickless green candle indicating, right, buy side delivery above this high, right, and then into our previous swing high. After that happened, right, I zoomed in on an even lower time frame, right, and noticed, right, one, we were below Sunday open, Sunday midnight open, that is, right, being here, below. Induced liquidity on the highs. Right, after this sweep and close back within the range, right, I wanted to anticipate, right, that this low, right, in the sweep of the engineered liquidity, even here, right, this didn't need to be run. Accumulation, turtle soup, right, into your accumulation ranges here for your lower time frame market maker model, delivering past this high, right, and that's exactly what we got. With this soup low, it became protected. We delivered in, closed, and quickly reacted from it. And right, even here, right, we see the same thing, right, break above the high. And actually, I think that was my stop loss, and this was my entry, low key. I just can't remember lower time frame. This was back in July on the 8th. But either way, right, below Sunday open, there's an old Romeo video, right, where he takes a trade, right, super similar, right. We see displacement, thick down close candles into forming our 4-hour order block, sweeping the lows, right, leaving an FEG higher, right, and to go ahead and buy and, just hold, right, and, into our lower time frame market maker model here, right, you buy in here, right, stop loss right at this low, and, after, you just pull it up to, the previous low. You don't want to, be too small and not let it breathe, right, but once you see this order block created, right, reacted to, should be a high protected order block, right, delivering us higher and leaving, right, this wick FEG open, and, right, continuing displace away, right, flipping this FEG and flipping these. We see, right, with that protected low, we deliver higher, breaker again, right, low resistance liquidity, sweep, turtle soup, right, even you can add in here, right, at the order block, and if you have your low protected, or, your stop below the low like you should, right, rejection block entry comes for those guys, and it's me, I'm those guys, right, and, right, we deliver higher, right, high broken again, right, come in, order block here, deliver higher, right, we don't see, right, these type of, very quick deliveries because it's Asia, right, we see, coming in, why does that, well, that's pretty dumb, right, we see the same thing kind of happening around midnight, on Wednesday, but, right, all you need to know is, like, once the low is protected, it doesn't matter how fast we displace, right, we could, accumulate and distort as long as we want to here, right, but each low we turtle soup is going to be protected, right, so, turtle soup, right, this isn't like a super, like, we're just reacting off the order block, right, and do accumulation, right, manipulation, distribution, low time frame into your manipulation, right, that's protected until we create another higher high, right, reaccumulate, see that we need to sweep the lows, these two lows into 3 lows, actually I'm tripping, right, just these 2 lows, honestly we probably S&T these, but right, we technically don't need to run them, right, once we break the high, right, and come back into, an OT of our range. So, right, we start to deliver, right, from the wicks again, right, failing to close, right, beneath, thick down close candle into our wick, right, we close above, and we see, right, into our breaker / order block, we beautifully tap in, and right, for this on the 5-minute, right, this is going to be our order block, right, because it's our thick down close candle, right, that we then close above with an FEG here, tapping perfectly into it, right, using the wick with the open FEG. Right, I want to make sure I put that one. It's like a tick off. Are we serious? Right, either way, right, we get another tap, right, and even from this delivery here, you know, right, low resistance, high probability order block, right, one tap, two tap. It doesn't matter if we even tap it a third time, right, we still should deliver, right, and, oh, you know, wasn't even paying attention, right, but we do that a third time and tap right into our order block and deliver higher. And, you know, it's just order block to order block to order block to order block, or, you know, rejection block to rejection block to rejection block to rejection block. And, right, you saw, right, we went ahead and held this one, right, to, you know, a good, let me just go ahead and take this shit off. Right, and we see, right, we held that one, right, to our, you know, range high here, with our market maker model on the 1 hour, right, and, you know, even that is just the low-hanging fruit. I wasn't really worried about these highs because I knew I would hold past these, and then right into right this line here with our weekly rejection block, and we see right we have a sharp decline afterwards into more thick down closure candles, sweep of internal lows, right, order blocks formed here, could enter here, and even right 4 hour or 1 hour CSID here into your 1 hour breaker with the FEG into your 4 hour order block. So overlapping those PD arrays, right, you can see that we continue higher, break the high, no need to deliver past the low. Same thing, right, thick up closure candle, right, leaving an FEG, right, there's no need to, you know, even then we have a thick down closure candle into an accumulation, right, manipulation, distribution, coming into a Tuesday, right, open of 9 a.m. Right into your 9:30, and then open low, high close into your 10 distribution. Right, with you know, 8 not really doing anything, right, accumulating within the range, 8 or 9 manipulate 8's range into a 10 distribution. That's not always how it forms, but right, that's what we see here. Order block, right, rejection block, wick, whatever, delivering us higher, right, equal highs here. Small reaccumulation into your turtle soup, entering right there. I guess I could bring this down a little bit. Well, I think I added in, yeah. So either way, just bringing it down just a little bit, and you know, even like letting it breathe right down to the breaker. So you know, super safe stop is down here, and still that nets 9 RR right to our right. At this point, you know, I've already taken profit on it, so right, we should just run past these highs. Even then, right, my first, like, you know, real take profit inside the range could be here. Right, even then, I'm just going to let it run, because it's Bitcoin, and it should just fucking pump to the moon. Either way, right, posting this, you know, if it posts and it doesn't hit, right, either way, right, I've taken profit on the overall idea of the trade, and, right, we just had a copy-paste, right, you know, coming into, right, where's Sunday open? Right, coming into Sunday open, right, with midnight here, and then a thick displacing down closure candle, right, and then breaker formed, right, delivering higher. Even like this here, like that's a low-key a pattern, but right, it has the right narrative to it. And it is hard, you know, a lot of people will look at this as a serious pattern, but you know, this pattern right here has the narrative to it. So right, you can take this and even then into a more, you know, confirmed entry, right, and you know, even like this, you know, is still pretty good, but right, I don't like doing that shit, because you know, like in my opinion, right, you know, if we do blow this low, right, we're gonna go ahead and continue, like, you know, turtle souping these internal lows into right the higher time frame order block here, and even then, right, you know, at this point I could, you know, positioned much lighter than, you know, this original position was, because right, I'm letting the whole position run instead of taking partials on the right internal side of the range. But yeah, that's how you know, use your order blocks to your, you know, advantage, using right your 3 key aspects of leaving an FEG behind, right, having right that displacement away from the excuse me, away from the accumulation, right? Your order blocks need to be thick down closure candles if we're bullish, right? Away from the accumulation, thick down closure into more thick down closures into right our rejection block, where I'm sure we had an SMT here with like Ethereum or something. I just don't really trade SMTs on like Bitcoin or anything like that. But right, we also see that we've swept the low and left an FEG right from our 1 CSID here into right the breaker block, order block here. We then tap it perfectly and then deliver higher, right? Protected low into protected low. Not much more to add. Hope you guys took notes and enjoyed this video. Hope it had a little bit of, or not a little bit, but I hope it had good education, and hope you could just use it every little bit to your advantage. Want to hope thank y'all for enjoying and watching through. If you stayed to this point, go ahead and leave a comment and say hi or something, right? I really appreciate it, and I'll see y'all on the next one.